Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. Before we start in today's video, I just want to say thank you to everybody who subscribed to the channel, who liked the videos, who recommended to their family and friends. It's definitely going to help the channel in the long run, inshallah. So thank you for that. If you find in any of this stuff that we're talking about value, please, like I've always said, just give it a like. That's all I ask, okay? So thank you so much for everyone that's done it so far. Right, so the company that we're looking at today is called Micron. Micron is in the semiconductor company. I believe it's undervalued at the moment. This is one of the companies that has been on my radar for a while, and I've always been hesitant or maybe didn't have the time to do the research. So the last 2 weeks I've been doing a little bit of research, finding out a bit more about the company, and I'm now in a position where I can just go over and just kind of give you an idea of what this business does and bring it to your attention, inshallah. So Micron, like I said, it designs and manufactures and sells memory and storage products worldwide. The company, they have 4 different segments. So they do have computer and networking business unit, mobile business unit, storage business unit, and embedded business units. They develop what's called the dynamic RAM or dynamic random access memories, semiconductors. They also do a NOR and NAND products as well. These are non-volatile rewritable semiconductor storage devices. The other thing they do as well is they are in the cloud services. So some of the chips that they produce are used in the cloud server, enterprise, client, graphics, networking markets, all of that. So yeah, so it's in the right industry and is in demand at the moment. So let's dig in, let's see what we can find out about this business. So the first thing, as usual, we're going to go into Yahoo Finance, just look at the summary. So it's currently trading $93 per share and has a market cap of $104 billion at the moment, little bit volatile, and PE of 14. That is really cheap, and they have an EPS or earnings per share of $6.46, okay, 46 cents. And then you've got little bit of dividend, so that's okay, 20 cents, whatever it is, it doesn't matter, okay. Again, this is one of those companies that probably grow faster, so you don't really have to worry about the dividends. Then we're going to look at what the analyst predicted or are predicting for the next couple of years. So 2020 in terms of revenue estimates, sales growth, they're expecting about 16.30 for 2022, and then a year after about 19, almost 20% in 2023. So it's definitely heading the right direction. So the sales are growing. That sounds good to me. We'll look at the financials in a second. Then we will look at growth estimates. So here, current year is expected to grow 47%. Next year is expected to grow almost to 29%. And then the next 5 years is expected to grow 24%. So this is definitely high growth business, okay? And as you can see here, currently, okay, it's trading at $93 per share. But Yahoo Finance expected the average price to be $106 per share. Let's now look at the financials. So we just looked at the analyst straight away, but let's look at the financials, see if the business is doing all right in terms of top line, bottom line, look at the free cash flow, look at other things, the debt and so on, because we want to know if this business is sustainable. Okay, so when we look at top line or the revenue, total revenue here, you can see from $30.3 billion to 23. So there's a drop there. Now, sometimes these things happened because the business, they may have sold a company and therefore they reduced their overall revenue. That could happen. I'm not sure why it happened. Maybe we just need to do a little bit of digging and find out why that happened. But from there onwards, okay, so it was 2018 and to 2019, something happened. So you definitely need to find out what that was, okay? So, but then 2019, we've got $23.4 billion. Then is $21 billion in 2020. So 2020 has been a rocky year for a lot of business, so I'm not worried about that. But then 2021, okay, 27.7, and then currently, obviously, that's where it is. So trailing 12 months is basically 27.7. So it's definitely gone back up, okay, but something definitely happened here. So we just need to find out whether they had a spin-off or something happened to the business. In terms of gross profit, okay, we're looking at from 17.8, obviously because of that drop from $10.7 billion to $10.4 billion. Okay, so it's all over the place at the moment. It's not what I would have liked. I would have liked that could stay consistent, but there is something there that we need to look at. So this is when you can look at the 10K, find out if there was some sort of a business they bought, or I don't know what happened, but something definitely happened there. Okay, then let's look at the net income. So 14 billion to now 5.8 billion dollars. But if we just focus on the last 4 years, okay, 3 years in the last 12 months, okay, you can see 6.3 to 2.6 to 5.8. Then currently, obviously, it's a 5.8. So yeah, there is, like I said, it's a little bit all over the place. It's not as neat as I would have liked, but there's a little bit more research that we still need to do. So in terms of the assets, okay, now what we're looking for is this business going to be all right in the next 12 months? And the answer is definitely yes, because if you look at the current assets, they've got $19.9 billion, okay, and then current liability is only $6.4 billion. So they've got enough, they can liquidate this almost to $20 billion to pay off this $6.5 billion, okay? So that's enough for us. The other thing we want to see as well is the shares issued here. Now, this is interesting because it's growing. Okay, so they are issuing more shares, interestingly, right? So that is not a good news. So I didn't like the financials at the moment. So I didn't like the income state having just 1 year up, 1 year down. And now we've got another thing where the business, something is going on here. Why are they issuing more shares? That's interesting. They're paying dividends. So let's go to their cash flow and see what's going on here. So, right. So we had $8.5 billion, then 3.4, then 83 million. And then we back to, so 2020, they only made $83 million, okay, because it's in thousands, so that's a million. And then you've got 2.4 in 2021, and that's what it is now. Okay, so they've got a little bit of cash. They got enough cash to pay off that dividend. But yeah, it still doesn't add up. Okay, so repurchase of capital stocks. Yeah, they're buying back their shares, which is decent, but no, that they've actually selling it is not. They're not buying it back, because if you look at here, okay, they are actually issuing more shares. Sorry. Right, so that's interesting. So that's one of the things that we can look at. So it looks, the business is slightly all over the place. I'm not sure what's going on, but the predictions look good. Let's see if this oil stock is basically undervalued at the moment, if it's a buy or not. So according to Morningstar, okay, they expected the price to be $90 per share. It's currently about $93 per share. So it's still fairly valued. Okay, and they don't have a moat, which is another thing that's a bit worrying. Okay, so economic moat is none at the moment. Okay, I like some business to have the majority of the business that I invest in. I like them to have a wide moat if possible. Okay, but this one doesn't have any moat, which is not that bad. It doesn't mean you're not going to make any money. It just means they don't have competitive advantage, basically. That's all that means. So let's look at tip ranks. Okay, and according to them, it's got upside about 15.6%. So they're expecting the price to be $107 per share, and it's currently $93 per share. And there's quite a few analysts that are looking at this stock, so that seems is very interesting business. Okay, so many different companies are looking, from Goldman Sachs and Bush and so on, Morgan Stanley and Barclays, and a lot of them are actually saying, so Barclays, for example, says $100 per share. Okay, 7% upside. You're looking for Morgan Stanley. At the moment, they're saying it's a sell, it's a hold, but it looks like they saying sell it. To me, anyway, Bush, same, more or less the same, still a little bit. Goldman Sachs, okay, so $101 per share, 8%. So the average here, okay, is a moderate buy of $107 per share. And finally, what we're going to look at is Micron. It's using simply Wall Street, and this says is overvalued, 29, almost to 30% overvalued at the moment. They expect the fair price to be $71 per share, but currently $93 per share. So they are saying is overvalued. So yeah, Micron has been on my list for a while, and one of the reasons I actually I was interested in it, initially it went down to almost to $60 per share, I think. There we go. So Wednesday, 13th of October, I think that's where maybe the earnings came out or something happened. It went down to $66 per share. Since then, it's gone up about 40% up. So it was around that time I remember seeing, and I've added to my watch list to kind of have a look at it later on, but I didn't actually have the chance to look at the business again. Now, this is, to me, this is not a buy. I would just skip this business because I'm not really happy. I'm not comfortable. Okay, normally I don't look at the business, but that I'm not really comfortable. But having looked at this now again, not really comfortable. I wouldn't add this to my portfolio, but some of you probably own this. Okay, if you can explain to me what happened here, that would be really nice to know, because it is growing their business model. I mean, it looks really good in terms from sales revenue, from the growth of the business in the next couple of years. It looks really decent, and I like the industry. I love the, if you know me, I love the technology sector. I understand everything in here. Okay, that's what makes it easier. Warren Buffett always says, buy a business that if you understand the business, then buy it, right? If you obviously, you know, with a good price, whatever. But if you understand the business, it actually makes a huge difference. And I know all of these things that we're talking about here are in huge demand right now, especially when we talk about the data centers, the cloud servers and enterprises and all of that. It's actually in demand right now. Okay, so yeah, it would be interesting to find out what you guys think about this, because to me, I own Qualcomm, I don't own AMD, I own TSM as well. Okay, so the two other companies that I'm recommending on this list. But yeah, Nvidia is another one. But it seems interesting, but I just need to know a little bit more. Maybe it's one of those businesses where you just need to dig a little bit deeper to understand why people were talking about this business. Okay. But yeah, that's my take on Micron. I hope you enjoyed the video. If you know and you own the business and you know what happened here, okay, you have a little bit more insight than we do, and you've read your 10Ks and you've got a bit more detail, whatever. Yeah, just let me know. Let me know what you think about MU. Does anyone own it? If you own it, why do you own it? And it will be interesting to find out, because I'm always looking for great companies to add to the portfolio where people are not really talking about. And this is not one of the companies where a lot of analysts, especially when I watch CNBC and things like that, I don't really see them talk about much. But yeah, interesting business, absolutely. But yeah, we'll see what happens. Right, thank you very much for watching. Please like the video. Like I said, it really does help. I hope you have a great day. Assalamu Alaikum.